Yeah, so yesterday we saw an ADP private sector number that was really strong, close to 500,000, and the markets freaked out. They thought that, oh my goodness, this could mean the non-farm payrolls is going to be really, really hot. Does the Federal Reserve need to hike even more than two times in the remainder portion of the year? And so we saw a sell-off yesterday, and today's jobs number came in just slightly under expectations, which kind of calmed those nerves. So I think that, again, gives the investor the green light to say, okay, the Fed may still hike a little bit more, but there's probably, if the jobs numbers are getting a little bit weaker, maybe there's not incentive or the want by the Federal Reserve to continue to hike much more past that. So I think it essentially opens a light at the end of the tunnel.
Bitcoin fortune is no longer tied to sentiment in the U.S. stock markets. The 90-day rolling correlation of changes in Bitcoin's spot price to changes in Wall Street's tech-heavy equity index, NASDAQ, and the broader index S&P 500 has declined to near zero. That's the lowest in 2 years, according to data tracked by crypto derivatives analytics firm Block Scholes. The dwindling correlation with traditional risk assets means that crypto traders focusing solely on traditional market sentiment and macroeconomic developments may face disappointment. Since BlackRock's filing on June 15, Bitcoin has produced a return of 25%, ignoring the range-bound activity in the U.S. stock indices. Markets are hopeful that the U.S. Securities and Exchange Commission, SEC, will change the pattern of rejecting applications by some of the world's top financial services companies. But on Thursday, fears about economic growth, a precursor to inflation, overtook any euphoria. Ether followed a similar downward trend, falling sharply from its peak above $1,950 following an ADP report showing that the private sector added 497,000 jobs, more than double many expectations. The ISM Services Index rose to 53.9 in June, beating consensus expectations of 51.2 and May's 50.3. Let's join Gareth Soloway as he shares his views on the market reaction to the ADP report, his Bitcoin analysis, and what he sees in stocks going into the new week.
And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin. So the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021. And it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, if no one's listening to me, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level. I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like NVIDIA and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has just run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark. So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here. And there's a correlation between M2 and what risk assets do. You're seeing this kind of opening. And I know Ben Cowan and I have discussed this quite a bit in the no-shill zone. You have this M2 and stock market diverging. And what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2.
Bitcoin's relative percentage of the total cryptocurrency market capitalization has hit 58%, its highest level since April 2021, according to a new report from Coinmetrics. With a staggering $590 billion market capitalization, the world's leading cryptocurrency currently has further pushed back on Ether and smaller altcoins. The total market cap for the industry sits at $1.2 trillion, according to CoinGecko. This comes amid news of heightened regulatory scrutiny by U.S. regulators, who recently claimed a handful of cryptocurrencies were unregulated securities, causing several to shed billions off their market capitalizations. Gareth discusses the Bitcoin dominance and breakout catalyst.
We don't know any of the security classifications now that have to do with what the securities of crypto will be. And I think that's just keeping so much. I mean, I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance based on the chart. It's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%. So there's the two scenarios are Bitcoin falls a little, the altcoins fall a lot, or Bitcoin rises a lot and alts rise less. And so either way, this just kind of continues to impress upon investors that probably the place to be if you're holding for the next 6 months is in Bitcoin, 12 months. If you're playing quick little trades, obviously alts can outperform, but for the midterm, it's probably Bitcoin is your best play in terms of return. This major kind of infusion or of fear from the SEC, right? So that's really what's going on here is like the SEC has now made it so that you don't know if an alt is worth 10% of what it is currently or if it's worth 10x of what it is right now. And so without clarity, it just keeps so much money on the sidelines. But I'll tell you one thing, and I've said this to so many people, that if we get clarity with the alts, like let's say they come out with rules for these altcoins that are securities and we can see clearly, then we can value them. And you might find that like a Polygon or a Cardano is maybe valued way too low right now. The other side of the coin is it could be the opposite too. And that's what we just don't know as investors. If you're looking for what that could be, it could be a approval of a Bitcoin ETF. It could be the stock market continues to rally and risk on continues here, in which case eventually you would assume risk on means Bitcoin heads up as well. So those would be the positives that investors should look for. The negatives, which I think there's more negatives out there. If you see the stock market topping out, let's say the stock market even has a 10% correction from this massive run we've been on over the last, since October of 2020. If that starts to panic investors, do we see exiting and a breakdown on Bitcoin? So for me, it's watching this range. Obviously, it's a very tight range, and whichever way it breaks, I would go in that direction in the short term.
Bitcoin has been leading a bullish rally over the past week after BlackRock filed for a spot Bitcoin exchange-traded fund ETF. The Wall Street colossus sparked Bitcoin's rise in crypto market dominance and triggered investors to buy the asset, despite many previously denied ETF applications. The price boost has also spilled over into other assets, such as Grayscale's Bitcoin Trust, GBTC. The so-called GBTC discount, which refers to the difference between the price of the shares and the net asset value, NAV, of the Bitcoin it holds, continues to drop, hitting a monthly low of 30%, according to iTrust. Coinmetrics, an open-source data analytics platform for public blockchains, reported Bitcoin's dominance steadily dropped during the crypto spring of 2021, slumping to its lowest level in January 2022. At the time, it accounted for 37% of the global crypto market cap. The report also showcased that Bitcoin's presence in the so-called CBMI 10 Coinmetrics Index for the top 10 cryptocurrencies has hit its highest point in 2 years, weighing in at 65%. The metric, however, excludes stablecoins such as Tether, USDT, or USDC. Bitcoin is up year-to-date by 85%, currently trading hands at $29,264 as per CoinGecko data. The asset has outscored the majority of cryptocurrencies in 2023, with notable exceptions from Bitcoin Cash and Lido Finance. Legendary trader and technical analyst John Bollinger took to Twitter on Friday to highlight a noteworthy Bitcoin pattern. Known for his creation of the Bollinger Bands, a popular tool among traders for analyzing volatility and price levels, Bollinger identified a classic sequence playing out on the chart: blast off, rip through the upper band, consolidate, find support at the middle band, and turn higher. Bollinger's tweet suggests that Bitcoin, whose price is currently sitting at $30,219, is now finding support at the middle band, historically an indicator that a price increase could be forthcoming. Bollinger's pattern commences with a blast-off, an aggressive price surge that results in a rip through the upper band, where the price exceeds the upper Bollinger Band, indicating a strong upward momentum. What do you think of Gareth Soloway's view? Drop your comments below and endeavor to hit the like button, subscribe, and turn on notifications. Thanks for watching.